Ladies and gentlemen, welcome to the third quarter 2013 webcast for Cadence Capital. What we're going to go through today is the placement that's been announced and the bonus 1-for-1 option, and a brief update on the RHG investment as well. The placement that we're doing at the moment is for a maximum of 53.8 million shares, and the money's being raised at a price of $1.43, which was the pre-tax NTA last Wednesday at the close of business. You may have noticed on our website that we've since announced that the NTA has gone to $1.47, so that the NTA at the moment as we speak is $1.47. At the same time, the board announced that each shareholder in Cadence Capital, as well as all people that participate in the placement, will receive a 1-for-1 bonus option issue with a strike price of $1.43 as well. That option can be exercised on or before the 15th of August 2015, and anyone on the register on the 15th of January 2014 is going to receive that option. Now, that option also has value in addition to the share, and we estimate that that option at the moment has value of between 7.5 and 11.5 cents per option. So when you come back from your holidays in January, on the 15th of January, you will see a CDM share trading and a CDM option trading as well. And the combined value of those two items, the share and the option, is what you are paying $1.43 for in the placement that's about to come. The timetable for the placement is reasonably tight. The broker firm component, that is where brokers and advisors bid into the book, it closes on the 27th of November, next Wednesday, and the entire offer closes on the 10th of December, which means people will have their shares tradable by the 18th of December 2013. As we've already said, the options come into existence in the middle of January next year and can be exercised on or before the 31st of August 2015. Turning now to the key information on the placement, and as always in our presentations and our prospectus and any information that you receive on Cadence Capital Limited, the purpose of the fund has been set up to generate high fully franked yields as well as capital growth. That continues to be the case for the fund manager. That is what we're trying to do with shareholders' money. And we're also, as we grow, getting a lot more liquidity in our fund. Our fund is about the 7th most actively traded stock by volume in terms of listed investment companies in Australia. And as we grow, we're getting a lot more research houses covering us and ranking our fund relative to other listed investment companies. And the other thing we can say now is that the management expense ratio of this fund has dropped significantly as our assets have grown. The structure of the transaction is that RHG shareholders will have a priority to receive the first 12.5 million shares. Our shareholders, the Cadence shareholders, will have an equivalent priority. And the brokers and advisors who then bid into the book by the 27th of November will have the next level of priority. And then the general offer will have the final priority in terms of participating in the placement. The thing that we want to remind people of is, of course, that this fund has a very detailed and disciplined approach as to how to invest its money. We don't have time to go into the fundamental and technical research that we do on each of our stocks in this webcast, but we would refer people back to the March 2013 webcast where we did go into this in quite some detail. The key points, of course, are, and unchanged, that we are the largest shareholders in this fund and we manage the money as if it is our own, because actually a big part of the money is our own money. The other thing is that we are not an index-hugging fund. We're not in existence to replicate the index. We are attempting to outperform the index and generate alpha, or a component of outperformance above the index. We are not a highly leveraged fund, and we don't employ large amounts of debt. In actual fact, we on average have about 24% cash over the last 8 to 10 years of investing using this philosophy. Often in our slides you would have seen us talk about the manager. Who are we? We are a privately owned, long-biased equity manager, and the management team that manages the Cadence Capital Limited Fund spends their time visiting 400 to 600 companies a year, and we have a very detailed approach as to how we scale into positions and how we scale out of positions. Once again, we did go into quite a bit of detail on this in the March 2013 webcast, and we would really encourage shareholders or potential new shareholders to have a look at that webcast, where we clearly go through the fundamental and technical components of how we manage the funds. Our funds have grown to in excess of $200 million under management now, and I think we've already mentioned that we are a large investor into that strategy. And who is the team? The team consists of the 3 portfolio managers that invest the money on your behalf. Those are myself, Chris Garrard, and Simon Benouvrier, who has joined us from Platypus, where he was a portfolio manager for 8 years. You'll see him as a new member of the portfolio management team. We are all jointly responsible for investing the funds of Cadence Capital Limited, and Wayne Davies, our COO and CFO, operates the business, and Michelle Morgan has taken over the marketing and investor relations, which we, as many of our shareholders would know, we try to interface as transparently and as often with our shareholders as possible via a monthly newsletter and a quarterly webcast and the traditional AGM and half-year and full-year financial statements. Everything else in the business is outsourced, and many people that are existing shareholders will have seen this organizational chart before. Key facts around the fund then are that we're currently 200 million of funds under management, and with this placement will grow. I think we've mentioned earlier on this webcast that we are by volume the 7th most liquid listed investment company in Australia at the moment, and the fund tends to produce a fully franked yield of between 7 and 8%. In the year just gone, we were more towards the 8% fully franked side of that equation, and importantly, 55 to 60% of our shareholders are self-managed super funds or self-directed funds, or people that to some extent or another have taken responsibility for managing their superannuation funds or their personal wealth or family trusts. That number has grown significantly over the 8 to 10 years we have been investing shareholder funds. The stock trades under the code CDM, as most of you would know. We have recently started to see ourselves appear on a number of platforms, which is a pleasing sign. And there are now 5 stockbrokers doing research on us, and we tend to rank reasonably well on those research reports. And we would encourage people, to the extent possible, to have a look at some of those reports. We do actually have a number of those reports on our news section on the website. The next slide is actually a graphical representation of how our fund is exposed relative to a traditional long-only fund manager. Really, what we're trying to show shareholders here is that when markets are going up, we tend to be invested. When markets are falling, we tend to reduce our exposure to the market and hold high levels of cash. And then when the environment changes, we scale into and out of our stock positions so that our exposure is changing over time. A traditional fund manager is long only and 100% invested at all times. The other really interesting thing about running funds over the 8 to 10 years that we've been running money is that the All Ords Accumulation Index has delivered between 6 to 6.5% per annum return. That is not really a satisfactory return for investing in equities. You are not really being rewarded for taking the risk you are getting 6 to 6.5% return. It's because this period includes the global financial crisis and such a volatile period. We as a fund management team believe that the next 10 years should deliver 10 to 12% risk-adjusted returns. That's the All Ordinaries. And of course, our job as a team is to outperform that All Ordinaries Accumulation Index and produce a return above the index, or what we call alpha. In fact, that is how we get paid for managing the funds. The next slide should be one that is familiar to most of our shareholders, and that is our dividend profile, which illustrates a steadily growing and increasing fully franked yield. And when we are able to, or in particular years when we've had very good performance, we like to pay out special dividends as well. We point to the performance of that dividend over the previous 7 and 8 years, and we have seen a steadily growing dividend income stream. The next slide is a summary of the offer. Our fund has been around for just over 8 years now. We have on average produced around 20% performance, which is about 3 times the All Ordinaries Accumulation Index. The All Ords has not had good performance over that period of time. On average, we've held 24% cash during that period, and we've produced somewhere between a 7 and 8% fully franked yield for the majority of that time. Our fund is starting to get ranked by a number of broking houses, and we tend to rank reasonably well on those broking houses and on those broking houses' research. The last 2 points we think are quite important, and that is that this placement is actually being done at NTA. It's not being done at a premium to NTA. Our fund has tended to trade at a premium to NTA over the last number of years, say 5 to 15% premium to NTA, but we're actually tracking in and around NTA at the moment, which for incoming shareholders is an opportunity to get into the shares at the right price. and we hope that the shares with a NTA at the moment of $1.47, combined with the option that we believe has a 7.5 to 11.5 cents of embedded value, will be attractive to people to participate in the placement at a price of $1.43. Just on the final slide, for the purposes of keeping people informed of the news and information section of our website, we have been asked to write a 26-part series by Eureka Report, and that goes into each of the positions in our portfolio, and we're going to be doing one of those reports every fortnight for a year, and that should give investors a very good insight into our investment thoughts, the stocks that we're in, and how we're thinking about those positions, and actually how we enter and exit those positions. And for Morningstar, we've committed to a 12-part series, which is one essay per month, which actually goes into our investment process. The first 3 of those essays have been written and go and talk to investment behavior and the behavior of markets overall, the psychology really of the marketplace. And each of these essays or short articles is available on our website, as are all of the Eureka Report essays. As a consequence of this style of writing and update that we've been giving to our shareholders, we have also been asked to syndicate some of that content onto the ASX website and onto the ASX newsletter. So you should start to see some of these reports on the ASX website as well. For any information that you'd like on our company, as always, please go to the website. All of this information is contained within the website pages. Thank you very much for your time, and we hope to see you as continued shareholders, and especially for those new shareholders that participate in the placement, we look forward to seeing you on our register.